It's Sunday today, so we need to have a look on the bigger and the smaller time frames, the weekly time frame, the hourly time frames. Liam will do that in a second with you guys on the weekly spot ETF data and also talk about why the Bitcoin exchange balance could be a big indicator for the next big price moves for Bitcoin in the coming weeks. And he will also talk with you guys about the long-term holder and short-term holder cost basis. All that in a few seconds. Before we start in, please make sure to leave a like on this video and comment down below for the algorithm. And if you're new to this channel, make sure to subscribe and activate the bell so you don't miss any of our updates. We're updating you guys every day here, so you guys always have the latest information for your trading analysis. And I would say we'll just start in for now.
The highest trading volume since the approval of the Bitcoin spot ETFs. That what we have seen in this week, 22 billion US dollar in a weekly trading volume is more than double the biggest trading volume we have seen since the 10th January and in the middle of February. For me, a really positive sign. The IBIT BlackRock ETF himself nearly had a trading volume of 10 billion USD in the last week. So why is this so positive? Many retailers are currently buying. The traditional finance section is much more attracted to Bitcoin. Bitcoin is in their eyes now a much more valid finance product. So we have a lot of buying pressure coming from the ETFs, which is pushing up the Bitcoin price again. Also, another really interesting on-chain data for me, the BTC exchange balance is still declining, lowest level in 6 years. Why is this positive? Decentralization is the key or the, let's say, main feature of Bitcoin, and if we have too many Bitcoins and on exchanges, the chance is too high that if we maybe see a crash of a bigger crypto exchange, we see a bigger crash on the Bitcoin price. But if those Bitcoin don't get lost because many people are doing self-custody, keep their Bitcoin on their own hardware wallets and don't keep them up on exchanges, for me this is positive. We need to say, if we have two big entities, like for example exchanges who are keeping up millions of Bitcoins and also hundreds and billions of USD in Bitcoin value, it's not so nice for the Bitcoin course all over, because Bitcoin, like I just said, decentralization and also the biggest key feature, everybody needs to participate in the network and not only the big players. Last on-chain data for today, short-term holder realized prices raised up 8% in the last 7 days. We haven't seen such a strong rising value since November 2020, our last begin of the last bull run, I wanted to say. This is for me, or better for James Von Stratton, the author of this tweet, a really positive sign for FOMO. Many people are currently buying Bitcoin again. They push up the Bitcoin course because they have the anxiety to miss the next bull run. As long as we see the rise of this FOMO, or also of this realized price cost basis, for me it's only the sign that we have many retail investors who are currently coming into the Bitcoin space and buying Bitcoins. So that's all for the on-chain data. I will give now over the word to the charts.
Guys, we will see an extreme bullish weekly candle close at the end of the day, and this is very positive for the Bitcoin price. Also, it is very likely that we will retest the old all-time high at 69,000 US dollars soon, and this is also a very, very nice milestone for the Bitcoin price, because we had almost 1 year in our bear market phase here, so it is basically very nice to get to old price levels or to the old all-time high back, and this is very positive. If we go further to the day chart, we can see that we will maybe see today's day close another higher high day close. So basically the highest day close for the last 2 years, 1 year, was at approximately 62,400 US dollar here. And if we are closing today maybe above 63,000 US dollar, this would also be very positive and bring us a little bit near to the breakout target of our bull flag here, the old all-time high at 69,000 US dollar. If we go forward to the hourly chart, we can see that we have an ascending triangle here, and this ascending triangle has also a breakout target at around 65,700, 66,000 US dollar. So basically after this consolidation phase we had here over the weekend or the last couple days, it is possible possible that we break out to the upside and maybe see further higher levels. If the inflows from the ETFs are still that high like last week, we can expect that we will see the old all-time high soon. And guys, this was the video. I hope you enjoyed it. If you enjoyed it, please leave a like and a subscription. And I would say we see us in the next video tomorrow. Thank you and goodbye.